Welcome back, everyone. I took a trade earlier today, not financial advice whatsoever, but I got an entry at 1:15:37 this morning. So I was like, okay, let's take it. I think it's like a 2 pip. It's a 2 pip, so it's just within the swap. So very good, very good, very good. I hope that all this is over soon. I hope that war's over. Um, so we have to trade accordingly. We have to adapt, and we have to take the advantage, take the situation that is being provided to us. Over over the European session and since yesterday, we have seen, okay, we saw at least a bit of a fall in the US oil and a bit of fall in the UK oil, and also Brent. This has been above 120. We are really seeing a lot of we are seeing very high oil price. It can go higher, um, and it starts to sink into the economies. We are seeing fuel prices everywhere uh, coming in at much higher prices than normal. So that is, of course, adapt. We have to adapt to that, and we have to not necessarily stand in the way of the train. But yet again, today we are faced with what is going to happen over the weekend. Um, and of course, every day is a possibility for a ceasefire. Every day is a possibility for both of them to be done with each other, whatever that means. I have gone down the rabbit hole of history of that region. It is not easy. It is not straightforward. It is never going to be as simple as I would imagine it to be in the beginning. So, uh, for that matter, we've had a lot of interest rate meetings this week. Generally, from them all, are they worried about the current situation, that what it imposed to inflation risk on the short term, if that is Bank of England, if that is Swiss National Bank, if that is ECB, if that is FOMC, if that is Bank of Japan. Japan is 100% importing all of their fuel, so they definitely are hurrying. So what tends to happen in this situation is that we have growth to fall and inflation to rise. Now the question is, which of those are going to be the most important? I've always said inflation is always going to be the most important. So I have gone with the inflation story, where um, Europe or Eurodollar is going to go higher, uh, on the basis of that we're going to see interest hikes coming in from Europe. But we are all in the same boat of everyone is going to rate hikes. So maybe so that's a short-term move, and then overall, I believe dollar should be stronger in the longer run. It's just the shock that we have, the shock, but the current pricing that we have seen so far is and has been that's the start. It has been dollar bullish. So if we unwind that, then that should be dollar bearish. So to me, it's important to see, okay, what do we have on the table? We have risk, we have inflation risk, we have growth risk, we have escalation risk, and that is, I've seen that it's a bit difficult to understand the difference between the fundamentals and what's currently happening and how is that going to lead to dollar weakness. It's always the same play. It is risk play. Is there more escalations? Is there more escalations? And we saw, I think I would believe that what was driving the market higher on euro dollar yesterday was hopes and dreams, and and that seemed to be continuing today. Hello, Taran. Nice to see you too again after a very long time. I'm trying to be back. I'm trying to be back. Trying. Failing at it, but I'm trying. So to me, I'm like, okay, I have a euro dollar trade on. Um, I wanted to buy pound dollar. I didn't take it. And I think I'm right about not taking it. And the simple reason is I think we can go lower. I think we can have a lower price. And what's currently happening is we are doing that. But somewhere between the 38 and the 618% retracement would be great. So even if we get it down to 133, 32, that would be great. I'll still see that as a victory. And then if we then rise from here and we continue higher, where have you been? I have been in Discord. I've been on Trader Nick Lives every Monday, and then I've been talking to people, students, uh, helping them in the shadows. So yeah, trying to get back out there. But yeah, so 33, 34, somewhere around there. I can't necessarily guess what price we're going to get, but yeah. Swiss today has been very strong. So dollar Swiss fell, and I was like, should have sold it. Isn't really in my books to sell dollar Swiss as much as it's to buy euro dollar. But they were perfectly opposite earlier today. So it's kind of like doing the same. If you do invert it, then euro dollar is a bit stronger, but relatively. But yeah, Swissy had a really strong day. I was like, what if I buy Swissy yen? Because that fits me. That would be great. And then I just put a line there because it was the highest high. I want to pull back, so we'll see how far we can get the pullback. And if today a New York session is just a fall out, then I'll leave it. So what is the risk? The risk that I see, and I don't think it's going to overtake me or anything, is just that if we see market participants completely getting out before the weekend, then we should have a retrace of whatever moves has happened. So that's currently what's happening. It's an opportunity. I just want to be trying to get the lowest price before entering. So let it fall and let it see where we're going. As of course, Canadians retail sales 1.1 doesn't really matter that much. Ukraine, a little million with the US Saturday. Okay. And then yeah, okay. And then Waller is talking. So to me, I'm really looking for if Trump says anything. Because he has tried to talk this war into something positive, and hasn't really helped. So ECB hawks are saying that they need to consider April rate hike if inflation outlook sours further. Now that is good news for me that the ECB members are starting to see the need for a rate hike. On the calendar today, I don't think there was much to even do. It's Bowman's speech and then retail fills and kick. So at the end of the day, at the end of a very hawkish central bank turning week, where Bank of England was supposed to cut now because of the Middle East, is not cutting anymore. So what your store what I'm going to do over the weekend is I'm going to look into what happened in the 70s and 80s and 90s in the Middle East. Ari gave me an article from 1975 from the RBA of how they had a fuel crisis because of Middle East, and how that went through the society. So it's more like a central bank thing in terms of that specific paper, but to just get to know where are we heading, because the supply shock that we currently have cannot be sustainable for and still have a healthy, okay economy and growth outlook. And that, it's pretty bad for S&P 500. I thought was going to go higher, and even though I had an entry over in 1st of February, so this wasn't even on the radar. It is deep underwater at the moment, and I see that it is potentially can still hit stop loss, continue lower before turning higher. And when I took the trade, it was a blind, and it was okay. It's high. I I don't want market risk sentiment to be more than 5% volatility. And if it is more than 5%, if we start to drop now, I don't want to be a part of that drop. So that's kind of why I have a 5% stop loss here. It's not really, it's not that big stop loss. It's not great. It's just I just want to be in, and then once we turn around, if we turn around, and when we turn around, even though President Donald Trump said it's going to take, they're ending it soon. There is no guarantee that also Iran is going to agree to ending it soon. So this is still very much in the open. So until then, what are we left with? We're left with technical analysis. We are left with a ranging Australian dollar, even though we can see I'm trying to make arrows and say, hey, it's going to go higher from here. It has hit resistance at 71.30. So, okay, we are limited. We haven't really risen yet. And the reason why I would believe that Australia is where it is that it has a very low limited oil reserve. Second of all, they're dependent on China refining their oil, and if they're not getting anything out of the Middle East, then it's a dire situation. On the other side, it's good for Australia is that China is still getting delivered oil as one of the few countries, and Russia has stepped up a bit, not really doing a lot, but we really need to save China, keep China alive. For in the Australian dollar and the New Zealand dollar story, because they are propped up on debts, and if that thing turns around and falls and crashes, I don't want to talk about it. I don't want to be discussing that. So I'm thinking, and I am waiting patiently that this one turns bullish. And I don't think it's going to turn bullish until we have the declaration of ending the war. And between Iran, Israel, and US. And I am very confident that that is at some point going to happen because it historically has happened. I don't currently see, of course, it's a day by day. I don't see that we're going to do like we did before, like years upon years upon years worth of fighting in the Middle East. Nobody wins on that. And I can only hope that every leader in the situation sees that and agrees with that. And of course, for Americans, there's two things that really hurts them is soldiers coming back in the coffin and higher oil price, and we are seeing both. So hopefully that could turn Trump to change his mind, but get his done and get out. What's happening with gold? A very good question. Very long answer. I said as long as we are having inflation risks higher, higher interest rates expectations coming in, dollar strength, then also gold should fall. I can't remember who sold gold. Somebody was in the sell over here, and I was like, yeah, okay, cool. That's interesting. But that's kind of where gold is heading. But in my theory and in my life, is once or the moment we see, and that's where the market was pricing in yesterday, the moment we see that this is turning around, the war, this is going to rise again. Number two, we have seen, at least if not speculation, but rumors, or allegedly, that Saudi Arabia is starting to sell gold to cover losses. That is a very common thing to happen in a shock, where you sell off your gold reserves to make sure that you still have money, you still have reserves, and you still have liquid assets to mitigate the dollar crunch, the dollar strength, and you still have bills to pay. So in that sense, that adds more downward pressure for gold. In my world, I'm like, unless you are in a gold market, unless you are already sitting in a bullish trade, if that's something you don't know. But I'm waiting as a fish. Like, okay, maybe my 44 level will be hit again. But to me, I'm just waiting for it to turn around bullish. This market we have seen currently is very typical. Is that first we fall when the risks increases, where we have higher inflation expectation coming in for US, and it returns back higher again once that is subdued or reduced or whatever. And then I also have said that because of this situation, I am seeing more demand coming in and moving into gold, moving into silver, um, rather than staying in real estate or staying in other assets. So it's just a waiting game. It's just a waiting game. It's patience, patience. But yeah, also the same thing for Bitcoin, for that matter. Some kind of range. To me, it's a propped up version of how to view risk. And what I mean, it hasn't really moved that much, but more importantly, it hasn't fallen below the low we created the day the war started. So to me, very, very interesting. Should I buy gold now or wait for a drop? No, 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 no. Yeah. I can't give you advice or what to do. But what I said earlier was I myself want to wait for the signal for the market, sorry, for the war to end. That's going to be a very volatile situation, but that is going to be a one-sided market, at least for some day or two, a week, or a month, or whatever that time is going to be. But for gold, you have a V reversal right now. It's still very much bearish. Technically, you don't have a bullish trend. And also the drivers currently driving the market lower is still present. So for me, it's not necessarily catching a falling knife per se, or having a hot knife through butter, but you are in a situation where you are trying to, well, you don't have a one-sided market yet. You have a very 50-50, depends, could potentially fall more if this situation is not resolved soon. So you're betting more than anything else that the war is going to end. I can agree with that. That could and should happen. It's just that it's not necessarily what is going to happen. So more day by day, moment by moment, hour by hour. ECB this morning came out and said that they are thinking that euro dollar should go up to 120, and I said yes. That means dollar weakness. That also probably think. And the questions that they get a lot is why are they? How could they be so constructive about the euro despite what's going on in Iran? And to me, to build my case, is higher inflation expectations. They are not the first one, but they are in the talks of hiking interest rates, and whenever this situation is over, euro dollar is going to have a boost, because whoever sold from 109 1819 should be out of the market as we climb. Number two, we have renewed inflation risk to the upside. So that is benefiting the euro. On that scale, we also have dollar yen. Dollar yen yesterday came down quite hard with the dollar weakness, and is today, climbing higher. I would say that is a break of previous structure. That is a brand new lower low, and it all depends. Are we now going to make a brand new higher high, or is this going to be the peak? Now that depends on dollar weakness and also yen strength. What was important with the Bank of Japan meeting was that they opened up for a rate hike, even though they don't have growth, and that is important. It is an opening, so that would probably then make yen stronger. I am a yen bear, probably as long as they still spend a bajillion amount of money to buy bonds and everything. But it's still and then also they've said that they're going to intervene. So if we go above 150, so we didn't intervene here, which is very interesting. But if we come back up to 160 again, I think we are. I don't know if 161 is going to be the price. It can be 161, 160, sorry, 160, 160 and a half, 161. And as far as we go higher, the more intervention we are likely to have. That is, and as long as we are below 159.50, I am comfortable buying yen pairs. But if we go above that, I'll be like, we might have an intervention. So just make sure that we still remember that they have threatened us pretty seriously on Saturday last week, a week ago, together with the bank with South Korea, that they're going to intervene. That they seriously dislike the forex movements that they said is too excessive. That is the first warning of many, but it's the first step into intervention. Number two is the rate check, and that could come at any point where they call the trading desk of the major bank and ask for the opposite. So if it's Bank of Japan, they would ask, they would go to the trading desks of the major bank in Japan and say, what is the dollar rate? That would instantly signal that they're going to intervene, because then the next step is actual intervention. And they did that here the morning of Friday, January 23rd, at about 8 a.m. or something my time, I think it was, or 5 or 6 a.m. There was a bank in New York, Reserve Bank of New York. I think they called, I'm not going to me at JP Morgan, but they called a trading desk and said, hey, what is the yen rate? And then it dropped. And then it continued to drop because Takaishi won the election as a prime minister. So there is that. So for you guys to be comfortable in your trades, and I've been talking with a lot of people lately, and staying true to what you believe. So if you believe that dollar yen should rise, or dollar should rise, and then yesterday was a great opportunity to add buys. It doesn't fit in my strategy though, but if you were a dollar buyer yen week, then that was what's it, 100 pips, 200 pips, some 100 pip, 200 pip, better price. But yeah, until now, going into this area is going to be like 50-50 where we're going to end up at the end of the day, end of the week. Earlier and yesterday, I said I want to buy euro yen, but I don't want any other price. I really want us to come down to 182.58. Did we? No. So, I almost want to do that rather. Either that or that. So we'll see. I can't buy now. So it's what if it happens on Monday? Would be a great idea. So we'll see. We'll see if we can get in there at a better price. Same thing with British pound, Japanese yen. I really wanted to come down a bit and then turn higher. Hasn't really been really successful today. It's coming a bit lower. It's great. Just checking pound. Yeah, pound is falling a bit more. Dollar Swiss, yeah. Swiss yen, yeah. Okay, so I'm waiting for this one to turn around, turn lower. Sorry, a bit before I will try, because this is currently too high. And I also want one thing else, a new higher high, rather than being in this range situation. So there is that. New Zealand yen kind of in the same situation. Was turning around, turning bullish, but it's now just turned into some kind of weak range back and forth. Nothing really of magnificence, nothing really of great strength. But here comes the prize for you. Are you able to wait for two outcomes to happen? Either a brand new high and a new trend, or two, a return back down to 92.20 and look for another entry, which we have been in before about 3 or 4 or 5, 6, 7, 8, 9 times now. This floor has been holding for quite a while. It will not hold if we see intervention. So there is that side. So I'm looking for Euro yen, I'm looking for pound yen, I'm looking for New Zealand yen, and I'm looking for Aussie yen. They also came back down to a good level of 111.50, 20. Didn't really, I didn't really take it, but I mean, today is a good day for pullbacks. I like it, even though I wasn't given that last time. But of course, I see the risk here. That is sellers being in control there, buyers being in control here. So we're just somewhere 50%. It's just I wouldn't try to enter it right now. One lower price or a trend or something else that we currently don't have. So I have to wait for support. Oil turning a bit higher. Risk is turning a bit back. Yesterday was a bit of a iffy situation. So as long as we stay below 120 on the Brent, we are okay as a country, as a place, and it could be better. But okay. So if oil goes below 80, I would argue this 80. US oil below 80, I think we are pricing out the war. So until then, do we still have a risk premium? Oh, okay. Didn't think about shorting that one. Another one that I'm looking for is looking for Australian dollar, Canadian dollar. We came down to 96.20, but I really want a new high. This lacks conviction. I really thought that Australia is going to have a strength and a strong. Well, it is when we have an end to the war. So this is kind of like a pending when if and when then the situation in Middle East ends. This is like my go-to. I think this chart are going to have the more extreme opposites. If not, then I believe Australian dollar, US dollar, so strong Australian strong, dollar weak. So or any of the other ones for that matter. But on the commodities against commodities, this to the upside is what I'm waiting for. I haven't really added to it yet. Also New Zealand, I think I don't think it's going to do anything at all. The other thing is that Australia has already started to increase interest rates, and they are pricing to do more. But the only problem with Australia and every other country is that how big is the drawback in growth going to be? And remember, growth is posted, what is it, 3 months later, 4 months later than when it's. So if you have, I think it was QE Q4 is October, November, December was posted in February. So if you have data from October posted in February, it's like 4 months late. So that, and inflation is quite current. So inflation would rise first before growth growth will fall at the same time, but we don't really have the numbers out for it. But though we also have PMIs. So I believe inflation story is going to kick in first, therefore Australian dollar higher, and then when the slowdown in the economy starts to kick in, Australia could fall again. How is the situation in Norway? Norway is okay. I think so. We started the war. We started the situation at 23 kroner per liter, and now I saw 28 per liter. So quick math, that is $2.8 US dollars per liter. And if you want to do for a gallon, I don't know what the gallon rate is, but I think it's 3.7 or something. So 2.8 times 2.8 times 3.7. Yeah, it's about $10 or so, $11 per gallon. So it's there, it's high, but it's manageable so far. But of course, for people that is living hand to mouth, paycheck to paycheck, of course, it's not a fun thing at all to be a part of. Government is not doing anything at all at the moment about it, and they also say that they also said they wanted tax reduction on oil, on the gas price, petrol price, and then the government just answered and said, but we don't increase your taxes when it goes lower, do we? So why are we going to reduce it when it goes higher? So you're on your own. We produce our own. I think we have pretty self-sufficient. I haven't even Googled it, but to see Norway. I haven't even Googled it. Norway, self-reliance on oil, fuel. In English, because it would spell in the region. Self-reliance. I can never spell self-reliance. Of course, it came in the region. So we export. We have 80 times. We have a reserve that is 80 times our yearly consumption. I think that's okay. It never goes lower. And before 2020, price was, as I said, 28. The price before 2020 was 9. But of course, at the same time, they have increased the bensin Norges drivstoff i reserve. Maybe you can do that then. This Gemini thing. So we have a 20-day requirement, but I mean, we have. So we have a lot of oil reserves down the ground. But yeah, so we have we have never had a shortage in before or after we got the oil in 63. But I might be ignorant. I mean, like, oh, it's gonna die tomorrow. Point number 2. We have, what is it? Because you had me asked the second question. Slightly still not as important, but at least for private cars, how many cars are electric? because that for every month now, every time there's a new, like every month, like EVs are like 90% of the newly sold cars. Yeah, 97 of newly registered cars are electric. So we are less reliant on fuel, but of course, airplanes and trucks and lorries and boats and whatever, they still need fuel. They're not electric. So yeah. But yeah, the new sales are very, very electric. So if you have an electric car, you're like, haha, touche. If you have a Tesla is like, I don't know, Tesla is the I think they're the biggest market share by double. So if they sell, let's say, 8,000 of the number 2 per month, then they sell 16. I think the actual numbers is 10, but then they sell 20,000 Teslas a month or something ridiculous like that. So yeah, definitely an electric, now more electric based, and we get our electricity from water. So as long as you have water in our basins, then we are kind of okay. But yeah, I mean, we still need oil. We're not out of the woods by million by not far. But of course, we also have the same oil price. We are on Brent, so what happens in the Middle East affects us as well. So I don't need fuel directly in my everyday life, but things in my life needs fuel indirectly, meaning supply chains, food, storage, whatever. Okay. Should I call that? Is that enough? Can we get a price? 33.57. Stop loss is 114. No, this one can fall further. And even if it doesn't, can we use that as a low? And then on the other side, we do that, buy there, same price, but as we turn higher. I'm trying to negotiate a price so that I don't, if it hits stop loss all the way down here, I'm like, that wasn't the plan. But yeah, pound falls hard. Your dollar hasn't really come down to my price yet. New Zealand, okay, I see you. Dollar CAD, dollar Swiss, dollar yen. Ooh, new high. Aussie yen. Nope. CAD yen. Okay. Okay. Could have bought down there, but nope. Euro yen, pound yen. Okay. Yeah. New Zealand. Yeah, New Zealand turns interesting. So if we look at this overall, the uptrend. So we have a new higher high, and that has already happened. That has also previously happened. That's not a new thing. My current risk is about 73, 71 pips. That is not the brand new lower low that happened over here. What could really send this one lower is China turning over and falling over. There's a lot that could happen that could send the New Zealand dollar lower. So I think I need to have an entry here. Not of now. This is okay. We are at 38% retracement. So yeah, could we get it lower, or is this the world? Is this the price we're gonna get? I don't know. I want it a bit lower, slightly lower at least. If that is probably interpreted for next week. Yeah, okay, it is. So what am I looking at? What am I looking for? When we turn around, generally speaking, into a new trend, I am trying to get the best price before turning higher. I am currently negotiating with the center pivot, which is the aggressive entry price. I feel like we are a bit too high. But of course, if we turn higher, then this is also going to turn higher, and then this looks like the bottom. But I'll have to wait. I'll have to see. All right. So over the weekend on Sunday, we're gonna have a meeting on Sunday. I'm looking into buying your dollar, pound dollar, New Zealand dollar, maybe selling dollar Swiss. But that's going to be a fight against Swiss National Bank. Buying Aussie yen, Euro yen, Pound yen, New Zealand yen. I'm trying to find, an entries and stuff. So couldn't find something right now. But until next time, um, I think it's going to be a great time. So enjoy your weekend. Don't stress. Come back on Sunday. Have a meeting with me, and then we'll take it from there.